It has been a relatively quiet past couple of days in terms of new information. Seems like the only thing happening right now is Donald Trump's impeachment. We saw a new CEO from Intel. That's a very good decision. Bob Swan is a good finance guy, apparently, but he was leading that company down a path where it wasn't focusing on product. They've now hired a CEO who started working at the company at 18. He's very familiar with engineering products and should take that company higher in terms of being a good company, not just the stock price, the products they have, their ability to compete with competitors and deliver for their customers. Now, in light of a relatively quieter environment, we're seeing some interesting movements. For example, we saw Amazon down slightly yesterday, up slightly today. We also see a strong rally in bonds. I personally have not attributed that to any sort of cause. I think bonds are relatively unattractive assets right now, and they don't produce a lot of return. And we want return over here. That's why we focus on stocks. But that said, there's some interesting things that I can take from the rally in bonds and the rally in Amazon. Rally in bonds, maybe people are just looking for somewhere to put cash. They're, feeling a little concerned. Bonds are a good place to put cash, particularly treasury bonds, which saw a lot of buying today. People are putting their cash into a thing that gives them slightly more cash. But Amazon is an interesting buy. If you look at the chart of Amazon, it's been relatively flat for several months. I think Amazon and a lot of other megacap tech has embodied this period of time in this pandemic very well. They were winners of this pandemic. So they saw very swift and strong rallies to what I would call essentially is their maximum valuation. So they reach this point of maximum valuation where they have the storyline, they have the earnings growth, they have everything they could possibly need in the medium term. And the stocks kind of go flat. Apple's kind of an exception, but it's flopped around solidly and it's trading well above its historical multiple. So I believe the mega cap tech stocks are at maximum valuation. So to see treasury bonds rally and to see Amazon up, it's an interesting combination if you ask me. It's almost a combination of, just trying to reach for any sort of return and yield. In addition, allegedly, penny stocks are having incredible volume and the IPOs are still doing well. Affirm, I think, is a very good product and probably a very good company. So I think it deserves a rally, but it shows you the momentum is still there. In lots of growth stocks, they're still being bought today. That said, I want to return to the chart of Amazon. I don't normally like to talk about charts and stuff, but like I said, this is a stock that I think has reached maximum valuation, at least for this period of time, and is going to require, significant earnings growth, product development, or inflation to get to a higher valuation. I think these stocks can, afford to sell off a little bit and demonstrate a better price. Right now, they do not demonstrate a better price, if you ask me. It's going to be a very long time before you see any sort of return on these assets. At least in my opinion, the stock can go higher, but from a cash flow perspective, it's a lot of years you got to wait. So I think these stocks can come down a little bit. And when these stocks come down, I'm talking Amazon, Microsoft, Apple, etc., as vaccines return, people, kind of get back to normal lives, and these companies, particularly Apple, maybe or maybe not, have to get back to normal multiples. These heavyweights that are such big market caps may pull down a little bit of the rest of the market, inject some fear into things, and cause a little bit of a sell-off. I'm not expecting anything crazy. I am expecting some inflation, which will buoy the market and provide a floor. But I do think a sell-off is in order. And I think this interesting behavior in bonds, this, Amazon was up today. If Amazon were down, maybe I would have a point with that. But I think Amazon might come down a little bit. And that combination of bonds and Amazon coming down, it's going to be a little bit more like normal market conditions as we enter a more normal period of time. That said, I'm not bearish. I'm not doing any sort of crazy selling. I'm chipping and cutting positions that have seen massive gains, but I'm not in any sort of stocks that I'm not afraid to ride the wave, alleged wave in. I'm still keeping on to things that are well priced. And I have built a cash position. I want to use this cash position if there is a pullback, buy some of my growth that I like and go from there. So we're kind of just seeing what happens. Interesting behavior in the market today. I do think we deserve to see some sort of sell-off in the broader market, particularly megacap tech, which obviously I've been calling for a sell-off for quite a while now. Hasn't happened, but it's gone flat. And I think this area of the market can come down. And I don't think the market should continue to push up. Like I said yesterday, I think there's a lot more upward resistance than there's downward resistance. I think a lot, not just mega cap tech, a lot of stocks are reaching maximum valuation, essentially, in their range of valuation based on, how stocks move and not believing the efficient market hypothesis. And there's very few areas left, and they're not areas that this current, driving force of investors wants to buy. Things like gold, energy, and real estate. They'd rather buy electric vehicles, and these odd electric vehicle companies are becoming too expensive relative to GM and Ford. So we will see what happens, and until next time, peace out.